Hey traders, this is Blake Morrow with Trader Summit, and I'm so excited. I have Mr. Richard Matthews of 1.io and Michael Brown of Trader X with me today with us talking about, well, we're going to be talking about the markets in general, right?
Yeah.
Well, I hope so. I'm not sure. I mean, we could talk about Arsenal or something like that, but I'm not sure Dick or I would much cop at anything else.
Or cricket. Could talk about cricket.
Well, how about? Did you guys catch the Jets and Bills game last night? Never mind. Okay, we'll skip all that.
No.
We're going to talk about real football here. Real football. No, I'm joking. Okay, joking. But gentlemen, it's nice to have you all here because I know we're going to have a really, really busy week. We have, obviously the CPI data is coming out tomorrow. Everybody's waiting for that. By the time you're watching this video, it'll probably be just after inflation was out. So let me ask you, Michael, is it going to be a hot number or cold number?
Oh, don't ask me that. Just for the viewers' benefit, about 2 minutes before we hit record, Blake goes, "Don't say anything about inflation because you could look really stupid." And then he asked me that. So to keep with the Americanisms, Blake, I'm going to plead the fifth on that question.
All right. So I'm not going to hold your feet to the fire. How about you? How about you, Richard? Anything?
It's going to hold my feet to the fire. I think it's going to be a hot core number. Is petrol going to be gas? I think I should say, not petrol. Is that going to be up and push the number up? For choice, I'd call for a hot number.
It sure does feel like inflationary pressures are building globally, and it's not just a U.S. issue. It does feel like it's a global issue right now. So, but we're gonna bypass that. I really want to hear what your guys' thoughts are, not only on the European Central Bank, which is going to be the day after, but then we have to prepare for the Bank of England, we have the FOMC, and I'm sure there's about half a dozen other central banks that I'm not even mentioning right now that we have to pay attention to. But let's start off with Michael. I'm going to get your opinion really quick about the ECB. I think it's a toss-up right now, and the market's kind of viewing it as such. But do you see it as such, Michael?
No, I don't. You're right. The market does see it as pretty much a coin flip. And if you look at the surveys that have been done of economists on the sell side, that's pretty much viewed as a coin flip as well. I think the Bloomberg survey has one more economist in favor of unchanged compared to a 25 basis point hike. That's how tight we're talking. Personally, I come down on the favor of unchanged from the ECB. I think the deterioration that we've seen in terms of growth and economic activity over the summer is really going to spook policymakers, not just what's going on in Germany, what's going on in France, what's going on across the Eurozone, to be quite honest, but also the downside risks that are coming from places like China, where the recovery is just basically non-existent at this point. So I think the ECB are going to be sit on the fence and do nothing at this meeting. I think that's probably their tightening cycle done as a result. I think the window to raise rates further has shut entirely. And what tipped the balance for me was Schnabel, one of the most hawkish members of the exec board, came out with a speech a couple of weeks ago really flagging the downside risks to growth, the risk of over-tightening and doing a little bit too much. And for me, when you've got a German hawk, an influential German hawk saying that, I think that tells me all I need to know, that they're not going to be doing anything this month.
So, Richard, you and I had spoken last week, and you did at that time expect that central banks from the ECB, the Fed, and the Bank of England, there's a higher risk of them tightening and continuing to tighten. Are you still in that camp?
I am still in that camp, but I've changed from 25, 25, 25 to Zager and Evans at 25, 25. It's an old pop song from the 60s, a great song. I agree with Michael. I think that the basket case that Germany is rapidly becoming will stop. And I think you're right, when Schnabel starts, when hawks become doves, you've got to worry about it. And I just don't think that they will push it through. Germany's a basket case. France isn't much better. When you're relying on Spain to pull you through, you much as I love Spain, you've got to sort of question what's going on over there. And China is going to hit hard. The only thing I will say, and I know Michael's going to roll his eyes when I say this, and I'm not going to mention the Bismarck yet. I just keep an eye on oil, and I just worry about how that's going to hit Germany and how inflationary oil and the rise in oil prices is going to be.
Yeah, so this rise in oil, and we can stop and talk about it really quick. And Richard, let me ask you, and we're just going to stay with you really quick. So, you know, some of the upside targets that you're hearing banks talk about is at least 100. Do you see 100 as possible in this current rally in crude oil, or do you think it's going to be more of a lack of demand issue that keeps it under pressure?
I do see 100 as possible. I'm surprised that Jamie Dimon was talking about 140 this afternoon as a target. Goldman Sachs are talking 120, but I suspect they're long of it already. But Biden hasn't filled up the strategic oil reserves, has he? I understand. So, you know, I'd be very wary of it. And the unholy alliance of Russia and Saudi Arabia, and they're not big fans of Biden or America. I could see them really squeezing this market, and that's going to hurt Germany, and it's going to hurt Europe. Well, hurt all of us, but it's really going to hurt Europe.
What do you think about that, Michael? Are you in the same camp? Do you think crude's got some room to run here?
I make him right. I absolutely think he's got room to run. I think what's interesting is the fact that crude has rallied. I mean, what WTI and Brent are up 25% over the summer, give or take. It's a rounding error off that number. And it's managed to do that despite what we've seen in terms of the manufacturing data and industrial production and all that kind of thing, and the well-documented issues in China. So that to me says the supply side is driving this a lot more. And I think, as Dick mentioned, OPEC plus, Saudi, Russia, all of that lot, they want to tighten supply as much as they possibly can at this point. I think they've stated that pretty clearly, extending that cut to the end of the year, not just for another month as we expected, and again saying that they're prepared to deepen it. For me, I think oil is only going in one direction. It's not going to be one-way traffic. We could be in for a pause and a bit of a pullback as some positions get flushed out. But I think the medium-term view is definitely higher for both Brent and WTI.
All right. Well, you know, that's.
So I tell you what. Sorry. Just one more point on that.
Yep.
I'll make it very, very brief. What's interesting is crude's rallying, but the CAD's lower, the NOC's lower. You're not seeing commodity currencies move with it, which is an interesting one.
That is true. I mean, you would think that you would have a much lower U.S. dollar Norwegian krona and much lower dollar U.S. dollar Canadian exchange rate, but I guess you could also argue that it's one of the reasons why maybe the dollar Canadian isn't trading, north of 138 or 139 right now, is because of this tailwind that it has with crude, right? So it's going to be an interesting one for sure. Now let's change focus over to the Fed. So with the Fed, we have the ECB, then we're going to be looking at the Fed, the BOJ, the Bank of England. But let's focus on the Fed. What do you think we should be expecting from Powell? Is he going to give us just a hawkish hold this time around, Mr. Brown?
Yeah, I think that's a pretty good way to characterize it. I mean, to be honest, I don't anticipate too much of a change from Powell from what he said at the July presser or what he said at Jackson Hole. I mean, I think it's a given that the Fed, the FOMC are going to leave rates unchanged at this meeting. And I think it's also a given that Powell is not going to lean into the idea that rate cuts are coming anytime soon. I think he's going to leave the optionality on the table to hike again if inflation remains elevated or growth remains above trend. I think that's an interesting pivot, actually, at Jackson Hole, much more focused on above trend growth than above target inflation. So, everyone's talking about, and I'm talking about it, US exceptionalism, economic outperformance. That's great, but it has hawkish policy implications. So if you're long risk, you obviously need to bear that in mind. But I think the interesting framing for the Fed is, if you just took it in isolation, it's not that hawkish. A central bank governor coming out and saying, we'll be relatively data dependent, we'll stay where we are. If the data comes in hot, we'll hike again. That's the core message. I think it becomes a lot more hawkish when you look at it through the lens of market pricing, which is another 12 basis points of tightening this year and about 45 basis points worth of cuts in the first half of next year. And when you compare Powell's remarks and remarks of other Fed members, to that market pricing, there's just such a huge disconnect that has to resolve itself at some point soon. And even when it does, or as and when it does, that could be the next leg higher in the buck.
So what do you think about that, Richard, about Michael's comments there?
I actually think they may well hike. I think you might see 25. They'll certainly come out hawkish. And I absolutely agree. People are looking for, cuts in the first half of next year are bonkers. They ain't cutting. Why would you cut? The economy's strong. Unemployment, okay, it's edging up, but it's not out of control. I think they're comfortable with that. The economy is fantastic. Why the hell would they cut? They've run the hard yards, and we were just talking about oil bubbling up nicely. I think that that there is a problem in the back of the market on this whole conception. Oh, they're going to cut. They're going to cut. Yeah, they're not. And I very rarely agree with the Bank of England or anyone from the Bank of England. But Hugh Pill came out, I think it was last week, saying that rates are like Table Mountain in South Africa, and they've gone up and they're leveling out and they're not for dropping.
Well, I'm going to take into account just the conversations we've had thus far about the ECB and the FOMC. That means, and Dick, we'll just stay with you for a second. That means that we should just be long dollars right now. I mean, would you be going into the ECB long dollars?
Yeah.
Okay.
And if I had a 100,000 units to invest, I'd go in with 75,000 of them long dollars, and I'd wait just in case it popped up over the meeting to add to my position. I just think the euro is a piece of caca, as they say.
So wait, would you go long dollars of dollars and with Michael's money?
I hope not.
So Michael, what are your thoughts about positioning here? Because it seems like the dollar positioning might be a little rich right now. We've had, obviously sentiment's very bullish the dollar. A lot of people are looking to see if the dollar has actually broken this downtrend. Do you think being long of dollars right now is the right thing to do into the ECB and the FOMC next week?
I think it is, because purely for the reason that actually I've been happy to be long dollar for a while, which is that I'm not really prepared to be long anything else at the moment. I mean, as Dick said, you don't want to be long euro. You certainly don't want to be long sterling. We spoke about some of the commodity currencies, the antipodeans of getting beaten up left, right, and center, et cetera, et cetera. I guess if you're a really short-term trader, you might want to just trim your positions as we go into the ECB, and then maybe, as Dick rightly said, sell into any rallies in euro dollar if they were to occur. But yeah, I'd certainly be happy being long dollar at the moment. I think obviously we've had 8 weeks of gains to the dollar index. We're working on a 9th this week, the longest run since 2014. Everyone's been shouting that from the rooftops. So yeah, the bullish view probably is getting a little bit crowded. Positioning is getting a bit congested, and a period of consolidation wouldn't go amiss. But if you ask me for a 6-8 week time horizon, is the dollar going to be higher or lower than it is now? I think higher absolutely is my bias there.
All right. Well, this is going to be a question, and Michael, we can stay with you since, and I'll try to wrap it up with this for both of you guys. I know we have the ECB, we have the FOMC, we also have other central banks meeting. So what do you think is going to be the most impactful market moving central bank of the next couple of weeks?
I'm going to hedge my bets and give you two answers. I think a bit before the weekend, if you'd asked me this question last week, I would have probably said the Swiss National Bank, because I think they're going to turn a lot more dovish than the market is pricing. And I think we could see some decent upside in dollar Swiss, euro Swiss, all the Swiss crosses. Because if you look at the Swiss economy, inflation's 1.6% is just not a problem anymore. The economy stagnated in Q2. They're so exposed to the Eurozone that stagnation or even worse, contraction is just going to continue. And added to which, the Swiss National Bank have no reason to be buying the Swissy anymore. So I'd expect quite a big pivot from them. The weekend news flow has changed my opinion a little bit, and I think the BOJ could be a bit more interesting. I don't think they're going to do anything in September, and I just worry that some of the weekend headlines were maybe mistranslated. Maybe Bloomberg selectively chose the wording they put in their red headlines when, they flash them across the terminal and the yen rallies a big figure at the open, all that kind of thing. I think the BOJ are a lot further away from coming out of negative rates than the market, judging by where dollar yen has moved, it probably thinks. So I think if we do get a little pushback on that, or even if we just get a copy and paste job from what the BOJ said at their last meeting in July, well, that could be another cause for yen downside. But I don't think, and this could be famous last words, I don't think the Fed and I don't think the BOE are going to be huge market movers, given that their decisions have been so well telegraphed.
Well, let's see what Mr. Dick Matthews says. So, Richard, what do you say about all that?
I actually agree with Michael again. I think the BOJ is the one that could surprise. Very, very hard to read. That would be the one I'd be watching the closest. I think the one most likely to move the market is probably the Fed. But I'm going to throw a curveball in here at the end of the evening. Will Biden still be president in a month's time when we next have a chat? Or will he have gone, and will Kamala Harris be the first female president of the United States of America? I saw him on TV and heard him this week. He cannot survive as president. I mean, I'm being serious, and I love America, as you know. It's just absolutely horrendous.
As an American, I'm just going to go ahead and bite my lip. So we'll just leave it at that. We're going to leave it there. So I want to say, gentlemen, thank you for getting us all prepared for the next couple of weeks. I know it's going to be a big, volatility event just between all the central banks. One of the, the things about the moves of market and currencies, and one of the things that we can't get enough here is volatility, because interest rate expectations are shifting between central banks. Who's moving where? Why are they moving? When are they moving? And that's what creates volatility in our markets, which is good for the trading environment. So I want to wish you both the best of luck the next 2 weeks. And thank you so much for spending time with us. Michael, what's the best way to follow you there at TraderX?
Either traderx.com or Twitter, Mr. M. Brown.
And Mr. Matthews, how about yourself?
Either on 1.io or at Dickie Matthews on Twitter, or X, I should say now.
Oh, yes, it is X. I got told off for that this week.
Yeah, are you going to have problems with that, Trader X on X?
Can't help it if people want to steal our branding, can I?
That's right.
It's going through the courts as we speak. Yeah. My lips are sealed.
Gentlemen, I want to thank you so much for your time. Best of luck to you. And if you like what these two gentlemen had to say, make sure you give them a thumbs up. But get down below in the comments. And if you have a different opinion than Mr. Michael Brown or Mr. Richard Matthews, let them know down below. Thank you, guys. Best of luck. I'll catch you on the next time that we chat.
Cheers, Blake. Bye-bye.
Bye-bye.
Hey, traders. Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also, click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.